Hey everyone, it's Charlie. It is Friday, June the 12th. We've seen kind of a boring week in the markets, and at least as far as action, it's pretty much been at a sideways pace as far as stock valuations go. But in commodities, we've seen a substantial rise. Obviously, it has to do with the dollar weakening over the last couple weeks. I mean, it wasn't very long ago. It was sitting at about 97 on the index, the dollar index, and for a lot of time in the last week, it's spent time at the 87 mark. So, and you've seen currencies like the Canadian dollar go from $1.25 Canadian to $1.08 and $1.07. The dollar strengthened a little bit today, which I think pushed it back up to $1.10. But the trend is definitely going back to, with the Canadian dollar, we're going to have parity again. I have no doubt in short order we'll be trading dollars again, which and it'll be sold as good for the U.S. economy, good for exports. But the fact of the matter is, what are we going to export? I mean, what are we exporting to Canada? I live in Montana. I live a couple hundred miles from Canada. And I know when there's parity on the dollar, it's good for us because we have a lot of Canadians coming down buying vehicles or kitchen cabinets at some of these lumber yards, Home Depot, because they can buy it cheaper here when there's that kind of parity rather than in Canada. So we'll see some increase there. But it isn't like we're going to export refrigerators and televisions and wash machines and you name it all over the world because we don't make any. So I think what's really important over the last 2 weeks is the eye of the storm in which we are in has been established in my mind anyway. We're in the last couple weeks, we've had our Treasury Secretary in China, we've had our President in the Middle East, and I think not for the stated reasons that we're being fed while they're there. I think that deals are being worked out and deals are being made with these countries and regions that hold all of our debt. Now you have Japan coming out yesterday talking about how they have undying love for the U.S. dollar and our policies, and we're doing the right thing, and that sparks a rally in the dollar. So I don't know what negotiations happen there, but when the rest of the world is talking about dumping the U.S. dollar for its reserve currency, when China and Brazil are trying to figure out how to trade products in their own currency, Russia's getting away from it completely. The Chancellor of Germany, she's out there saying, what the heck are you doing? We're going to end up with Weimar Republic again. For Japan to come out and do that is something must be some favor must be being called in or something. But I think the way I see it is we have even a stronger dollar today brought silver and gold substantially down and other commodities substantially down. Except oil, it did come off a little bit, but it's still trading well over $70 a barrel. I think what's going on is the same people who brought us the crash of '08 and is going to bring us the depression of the next decade, is also the people who speculate and control the trading of oil. And they need to get this oil price up and keep it up there to pay off the Middle East for all the dollars that they're holding. They want to get the price up there so they can get as much as they possibly can out of this economy and get it into the vaults of the Middle East. Now, in China, they're going a different route. They're taking the trillions that they already hold, and they're gobbling up every commodity, every hard asset they can get their hands on. And as a matter of fact, now they're now sitting on 40-year supply of materials for infrastructure projects. Who does that? They're not stupid. They see a great opportunity to buy real tangible assets with their dollar-backed currency, and so they're taking advantage of that. Now, one article that I'm going to post with this video that kind of supports that theory is the Baltic Dry Index report. It's showing that we're heading for another major slowdown. Now, this report is a barometer for materials being shipped around the world in cargo ships, and it had a 90% drop off last year with the downturn of '08. But in the last 3 months, it's had a huge rebound. Well, in this article, you can read it. It goes on to say that the reason for this rebound was China's voracious appetite for raw materials. And they're at the point now where they're just saturated with it. They're running out of places to put it, and they're slowing down on their consumption of raw materials. So in the last week, the Baltic Dry Index has fallen 20% again. So the people who bring us this report are saying that we're heading for another major slowdown because what was boosting the world economy was the good deals that were out there on things like commodity and oil. People were gobbling it up. They've got what they need or what they can afford, or they've traded their dollars in, and now we're going to see a repeat of last year. But only this time, if you're in America, and, well, you know what, let me just say, if you're in a Western country with central banks inflating your currency through the roof, there's no safe refuge in the US dollar or the pound or the euro. And I mean, when a crash happens this time, then we're the ones left holding the bag, a bunch of worthless currency. So, and I don't know if that plays out in this year, next year, 2 years, but what makes me think it's sooner rather than later is the people are waking up. I mean, like I said, the German chancellor comes out and she's saying, "You economists have lost your mind. You're going to destroy the Western world with your print policy." And Germany should know something about that. I mean, they've been through that. So we're having people wake up. We're seeing the UK leaning more towards fiscal conservatives, and now in the U.S. you have this H.R. 1207 that it's going to pass the House. They got the votes to do it. Now, I don't know if Pelosi is going to try to hold it up, or Frank, or if it's going to go to the Senate and get watered down to some kind of ridiculous bill like the current one we have that lets us count pencils and chairs but not the books, or if it's just going to outright be killed. But this is what I do know. I cannot foresee the Federal Reserve allowing the mass peasants to look at their books and to judge them on what they've done. I can't see them allowing that to happen in any scenario, because like a lot of people have said, to audit the Fed is to end the Fed. So will they crash the economy to prevent that? Why not? I mean, the game's over either way for them. They probably end up getting more money if they crash the economy again. Will there be some kind of crazy false flag to take our minds off it? Who knows? I mean, your guess is as good as mine, but certainly something to think about. So, at any rate, that's all I got for today.